This is the Asia Trade. I'm Haidi Stroud-Watts in Sydney, where the market has just opened. The top stories this hour. Korean investigators focusing on a bird strike and landing gear failure as they look for the cause of the deadliest passenger jet crash of 2024. Asian stocks set for a lower open with a slim holiday season, trading volumes potentially amplifying any moves. The regional stock benchmark is looking to sustain an 8% gain this year. And a state funeral to be held for the former US President Jimmy Carter, who's died at his home, aged 100. Just getting across some breaking news crossing the Bloomberg at the moment. We've got South Korean industrial production all in all coming in a little bit softer. In fact, just 0.1% of a move when it comes to that year-on-year industrial production number. Expectations were for a gain of 0.5%. The seasonally adjusted month-on-month comparison seeing a decline of 0.7%. That is also a little bit steeper than expectations. And that cyclical leading index seeing a change of just 1 point there. We have seen really that a growing impact when it comes to the political crisis that we see escalating in South Korea on not just the won but the broader economic outlook at large. Potentially that puts a limitation when it comes to the Bank of Korea's ability to further cut rates. But of course we continue to watch for that given how much support clearly the South Korean economy is needing at the moment. Bloomberg Economics seeing that political instability continuing into 2025. Unsurprising given that we've had that second impeachment of a leader in South Korea in less than 2 weeks. Let's take a look at the broader markets because it is getting to that time of year where volumes are thin, so perhaps we are going to see bigger moves if there are sort of conviction trades in either direction. We're seeing the ASX 200 just coming online. It is that staggered start to trading, so not much of a move. A little bit of softness at the moment. Chicago Nikkei futures also looking pretty flat at the moment. We are pointing to declines across most of Asia. A pretty poor lead that we had on Friday from Wall Street with the drop being led by those tech stocks, of course. Dollar yen pretty steady at that 157 level. We're also watching, of course, the implications when it comes to the yuan as well. We've seen some further pressure on the yuan as a result of that dividend play there, but also that sort of return for Chinese bonds in focus as well. Dollar charted there at 7.3. Take a look at how we're faring when it comes to US futures as well as the outlook when it comes to some of these other risk assets. We're seeing S&P futures looking mildly to the positive, perhaps a little bit of a rebound when it comes to those tech stocks. And watching crude, we're seeing a bit of downside there. $73.80 is where we're at, but very, very slow volumes of that year-end trading seasonally with really that focus on the risks for next year. Well, investigators are focusing on a bird strike and an unusual landing gear failure as possible causes of the Boeing 737 crash in South Korea that killed 179 people. Our Asia Transport reporter Danny Lee joins us now. So, Danny, walk us through what happened on Sunday. We're about 24 hours in. What are investigators focusing on at this point?
Well, we saw this spectacular footage that showed the immediate part of the accident, and that was quite unusual to see the plane sliding on its belly with its wheels not deployed and crashing into the embankment and this fiery wreck that emanated from it. And so this is a key piece of a clue of evidence that will help investigators try to unfurl what happened. And now investigators are zeroing in on a couple of items here. The fact that there was a bird strike at this airport in the country's south, and there was a mayday warning given by the pilots minutes before landing, and all these different things happening within a short space of time for the pilots as they came in to then land at the airport unsuccessfully. And so this is something that investigators will be trying to understand. Did something happen related to the bird strike? Was there something going on in the cockpit? Or was there something wrong that subsequently happened with the aircraft? And so by this very nature, this crash was spectacular given what was being filmed at the time. And so this is clearly quite devastating for a crash towards the end of the year. The worst crash in the country that has taken place ever now.
That footage certainly is shocking and devastating, as you say. And, Danny, there's been a spate of aviation incidents this past year, over the past few days alone, right? And it comes against this backdrop of quality concerns with suppliers, with aircraft makers. So do we need to talk about the context of the nature of this accident?
Yeah, I mean, aviation still remains very, very safe, and particularly when we saw 2023 being, incredibly safe. There was no large commercial jet accidents. Yes, now in 2024, we've had a spate of accidents, incidents and events, particularly at the start of the year with Japan Airlines, and then with this Alaska air door blowout, which raised a whole slew of concerns for Boeing. But aviation does remain very safe, and particularly this grim milestone that this South Korea accident, the first crash for Jeju Air involved in this crash, and this being the worst air accident in South Korea now ever. That was a milestone that has taken more than 20 years to pass. But given the safety improvements in aviation over a multi-year, multi-decade period, this clearly is just a rare one, given the number of flights and the number of planes, in particular of the Boeing 737, which is flying every day.
Danny, what's the outlook as we head into 2025 for the aircraft manufacturers in particular, right? It's been a challenging few years, and that doesn't look like it's going to ease.
Yeah, for the manufacturers, frankly, they'll be looking to churn out record numbers of planes, but they will be focusing very much on making sure that that supply chain is fixed. That supply chain which has slowed down deliveries, which has caused headaches for airlines, particularly around getting these new planes out the door. Also, just with complaints around quality and quality control. So these are the kinds of things that the airline industry, the manufacturers will be doing to try and move forward together as we still look to have another very busy year ahead in 2025 when it comes to satisfying that level of demand for travel, which continually edges higher to new records, particularly after COVID, and with more ambitions in the emerging markets. There very much is a sense that aviation in 2025 is heading for a real record year of demand.
Asia Transport reporter Danny Lee there. Another story in the same space that we're following. An Azeri president, Ilham Aliyev, says Russia accidentally shot down the Azerbaijan Airlines passenger plane that crashed last week, killing 38 people. Aliyev told State TV that Moscow should take responsibility. His statement came after a day after a phone call with Russian President Vladimir Putin, who apologized for the incident without saying that his government had been at fault. Well, former US President Jimmy Carter has died at his home in Georgia, aged 100. The one-time peanut farmer leaves a legacy of promoting human rights and peace after a single term in office. They faced challenges, including soaring inflation and a hostage crisis in Iran. For more, let's bring Bloomberg's David Weston in New York. David, really great to have you with us. As you sort of look at the retrospective of the former president's life, what sort of jumps out to you that perhaps, the mainstream, we haven't given him enough credit for?
Well, you hit, Heidi, on a couple of the big points that people will focus on, which is the Iranian hostage crisis, which was a terrible event. And there was also the oil crisis as we were lined up to get gas at the pump here. And, of course, stagflation. We had runaway inflation and stagnation. But as you suggest, there are some things I think people maybe have overlooked about Jimmy Carter, and that is particularly how it affected business and Wall Street. People overlook the fact that he was the one who appointed Paul Volcker to run the Fed, which really put inflation back in its place. Often people give Ronald Reagan, his successor, credit for that, but actually he put that in place. Similarly, deregulation that is associated with Ronald Reagan actually was started under Jimmy Carter with the appointment of Alfred Kahn from Cornell, who deregulated the airline. So he actually had quite an effect on the business community and on Wall Street, which we don't normally think of with respect to Jimmy Carter.
What do you think the most sort of, I guess, enduring parts of his legacy would be? And we do know that he was sort of quite visible in recent political cycles.
Well, listen, one of the most enduring parts of his presidency was what happened after his presidency, because he had the longest post-presidency of any U.S. president. And he received the Nobel Peace Prize for his actions around the world, promoting democracy and trying to police elections around the world, in addition to working on Habitat for Humanity, building housing here in the United States for the poor. So he had an amazing, I think most people would agree, the most remarkable post-presidency of any president, which I think will be an important part of his legacy. Another part of his legacy are the people that he influenced who were in his administration, who were young people at the time. He was something of a technocrat, having been a nuclear engineer in the U.S. Navy. And he went and hired the best and the brightest you could get. And those included some of the people who became leading lights on Wall Street, people like David Rubenstein and Roger Altman and Jane Hartley, who's just stepping down as our ambassador to Great Britain, as well as Ralph Schlosstein from Evercore. All these people were youngsters, really, at the time, in the Carter White House. And they were brought in specifically because he made a policy of going and finding the best and the brightest young people he could and bringing them into his administration.
You know, it was quite interesting to see that he had that final wish, right? He wanted to make it long enough to be able to cast his ballot for Kamala Harris, which obviously he was able to do. I do wonder, you know, if you sort of compare how we'll be ending the year, and we're, of course, going to be getting the state funeral that's been ordered by President Biden in the coming days, how much has politics and the landscape of, you know, the political arena for the US really changed since Jimmy Carter's time?
Obviously, it's changed really fundamentally. And it's important to remember with Jimmy Carter what he inherited. He came just in the aftermath of the debacle in Vietnam for the United States, and also just inherited a lot of the problems that came after Watergate and the questions about integrity. And he came in almost as an accidental president because people didn't want to re-elect Gerald Ford because of that pardon. At the same time, as we look forward into the new year with Donald Trump returning to the White House, a couple of things strike me as ironic. One of the things that Jimmy Carter did was the Panama Canal Treaty, turning Panama Canal back to people in Panama, which now Donald Trump says that you would like to undo. And also, under Jimmy Carter, they created not one but two different departments of the United States government, which were energy and education. Once again, Donald Trump now campaigned on eliminating Department of Education. So we'll see, but Donald Trump has set out a pattern for himself that he would like to undo a lot of what Jimmy Carter did.
Bloomberg's David Weston there in New York. Well, President-elect Donald Trump has thrust himself into the high-stakes fight over the fate of TikTok in the US. He's now urging the Supreme Court to pause a law that would ban the social media platform unless it's sold by its Chinese parent company. Let's bring the details with our Bloomberg News Desk editor, Jill Desis. And Jill, we know that President-elect Trump loves a deal, and he seems confident that he could, you know, reach a political agreement on this issue.
Yeah, that's right, Heidi. So ultimately what we're seeing here, if Trump were not to intervene, this law is set to go into effect on January 19th. That's the day before his inauguration as president. And so ultimately that law would say that TikTok would either have to divest ownership from its Chinese parents or effectively just stop working in the United States, go forward with a ban. You'll recall, Heidi, that Donald Trump himself was an advocate for a TikTok ban back during his first term in office. There were various complications that ultimately led to deals involving that one being the TikTok being sold off to a U.S. parent at the time. Just didn't really go through. Now we're here again, where he's singing a very different tune. Although kind of some of this dates back to his presidential campaign. It's not entirely a surprise that Donald Trump would get involved at this point in time, considering back during his campaign, he was kind of railing on against companies like Meta, Facebook owner, and others in Silicon Valley. We know that he has something of a contentious relationship, or at least had something of a contentious relationship with some of those platforms because they had banned him from various social media websites. Well, now here we are talking about TikTok, and he does seem like he wants to make some kind of negotiation happen, although according to this court document, it's not entirely sure what exactly that would be, just that he wants more time to actually do something with TikTok during his presidency.
And Jill, one of the other areas of friction with these big tech companies, and tech CEOs, including Elon Musk, right, has been on the issue of immigration, or skilled immigration in particular. What have we seen? Because it's been an extraordinary lot of, back and forth and weighing in across social media.
Right, Heidi. So this is a debate that really kind of erupted over the last couple of days. You've got a lot of consternation over what's called an H-1B visa in the United States. That's a specialty visa for companies to sort of bring in foreign workers into specialized jobs. This is used quite a bit in California, particularly among tech companies. I believe that a lot of tech companies are really the highest users of this type of visa in Silicon Valley. That's really kind of become a point of contention tension with some of Trump's other supporters who believe that bringing in foreign labor runs contrary to his America First plan. We saw, for example, the far-right activist Laura Loomer, who's been very associated with the president-elect, kind of weighed in on this battle and criticized these types of visas. Of course, people like Elon Musk are very defensive of these types of visas. I mean, these are the kinds of CEOs that are actually using them. We also saw Elon Musk sort of co-chair with this whole government efficiency program. Former presidential candidate Vivek Ramaswamy kind of weighed into this as well, defending these. Trump himself has kind of weighed in now, saying that he supports the use of these visas, really aligning himself with Elon Musk on this issue. But again, just kind of shows that when it comes to the issue of immigration, I mean, this is something where there's certainly quite a lot of gray area. There's certainly a lot of ways in which these visas really empower a lot of these Silicon Valley companies to do the kind of work that they're doing. And that is not particularly well received by everybody within sort of Trump's base of support here.
Our Bloomberg News desk editor, Jill Desis, as we set up for certainly an interesting political year to come in 2025. And US Treasury Secretary Janet Yellen has told congressional leaders that special accounting manoeuvres will be needed in mid-January to avoid breaching the debt limit. In a letter to lawmakers, she says that's likely to happen from around January 14th, and it kicks off what is likely to be a prolonged tussle over fiscal policy ahead of the handover to the incoming Trump administration. In the meantime, we continue to bring the latest when it comes to the aftermath of the Jeju air crash in South Korea. You're taking a look at live pictures of the crash site in Won in South Korea. This as the acting president has declared a period of mourning for a week nationally, as we expect to see joint memorial altars being set up across 17 cities and provinces to pay respects and condolences to the victims. Investigators at this point focusing on a bird strike and an unusual landing gear failure as the possible causes of the crash of the Boeing 737 jet. It is one of the deadliest passenger airline disasters in South Korea and globally. This is Bloomberg. Take a look at how we're trading as we head into really one of the quietest days of the year, right? We are expecting kind of very slim trading volumes, so not a great deal of convictions or any significant market moves, maybe a result of illiquidity rather than any kind of thematic. We are seeing dollar yen pretty much unchanged at that 157 level. Goldman's seeing the yen in that sweet spot for international buyers of Japanese stocks at these levels, with very limited risk they see of weakening beyond that 160 level. We're seeing dollar China not seeing much of a move, but that weakening trend for the yuan certainly seems to be persisting, given we are also seeing that added pressure of record dividend payouts as well looming. We're watching the won as well, continuing to flounder amidst those persistent political risks. Dollar dominance is really the theme that we continue to see. Let's bring in Gary Ng, who's a senior economist for APAC thematic research at Natixis. Gary, great to have you with us. So I'll start off on the dollar exceptionalism, US exceptionalism. Is that a theme that we can continue to rely on next year, or some of the debt issues and political uncertainty, and certainly now uncertainty for the Fed, might cast some concern over that?
Well, I think indeed the market, especially in Asia, needs to brace for the probably stronger than expected dollar because of the development in the U.S. And of course, there could be different political risks in terms of how the U.S. politics evolve. But when you look at the policies that the Trump administration will actually implement, look at the tariff, look at the potential deportation of illegal immigrants, and also the corporate tax cut, and basically all of these policies point to the fact that the U.S. inflation may not actually fall as much as people expected. And of course, that will also have an impact on the market rate as well, especially on the long-term rate, a 10-year, etc., which has already climbed to a relatively high level. So with this rate or yield divergence between the U.S. versus Asia, well, a rate will still come down, but it may not be as much as people expected.
Does it get to a point where, people are very quick to draw allusions to 2013, to a taper tantrum, right? Do you see that vulnerability for emerging markets? And if so, do you see that vulnerability within Asian EMs?
Well, I think one of the biggest difference versus in the past is that a lot of central banks, they now have more tools, more swap lines across the region, etc. So definitely the whole monetary system has been more resilient than before. But of course, if we look at this ongoing dominance of the dollar, if that actually persists, I do think that one of the biggest consequence, of course, is really on what is the room for Asia central banks to actually cut rates further if growth is affected by tariff and etc. So to me, this is probably like a risk that is bigger than all of the other point. And of course, the yield differential may actually drive capital outflows. But I think this time around, the central banks will be more resilient and well prepared towards shielding that sort of a very big shock.
A lot of that depends on the fate of China's economic recovery, right? We've heard President Xi characterize the challenges and the prospects of a rebound as being arduous going into 2025. Do you think that's fair? And, how optimistic are you that some of the measures taken so far are going to bear fruit?
Definitely, it is not an easy task because China is a very big economy, and we do see a very, very uneven recovery of the economy in China right now. So this is why even though we start to see more stimulus, whether it is from the real estate side or from the monetary policy side, things seems to me is that it's moving quite slowly. So I think this is also why the market doesn't seem to be too confident in terms of this fast economic recovery in China, even though it's possible to see China cutting rate by 50 basis point in 2025 or probably 100 basis point in our cut as well. A lot of these policies are fine-tuned in the way that for the policymakers to manage growth at somewhere around 4.5 or maybe 4.7% next year, which is not really like a very fast rebound as we see to counter the pressure. And together with all the geopolitics, I simply do not think the Chinese economy can rebound in a very significant way in 2025.
What about the fiscal side? Do you think there still needs to be more forceful fiscal spending and perhaps something more like direct payments to households in order to rejuvenate confidence?
Well, so far we do see some improvement in terms of some of the policies like subsidies to consumer durables or subsidizing companies to upgrade the equipment. There's also some rebound in terms of the central government-led type of infrastructure. Of course, I think it is an area that China can definitely work on. But again, when you look at it from the angle of policy makers, if they really want to manage growth as only 4.5% or around that range, then they will probably try to do it in a very, very cautious way because of the concern on debt. So yes, China can basically step up fiscal policy to support growth, but right now it's probably a bit more about stabilization rather than engineering like a very fast rebound.
Gary, great to have you with us. Gary Ng, Senior Economist for APAC Thematic Research at Natixis. More ahead on the Asia trade. This is Bloomberg. Just bringing you some further developments. Another Jeju plane malfunction has just crossed the Bloomberg when it comes to reporting from Yonhap. The Jeju Air Flight 7C101, which departed from Gimpo Airport at 6:37 a.m. on Monday, was found to have a problem with its landing gear immediately after takeoff. It has now safely returned to the airport. It was carrying 161 passengers. This aircraft was also a Boeing 737. Jimmy Carter, the 39th US president, has died at the age of 100 at his home in Plains, Georgia. Carter's presidency was marked by significant achievements, including the brokering of a peace accord between Israel and Egypt. Bloomberg's David Weston takes a look back at his life and legacy.
President Carter came to office in the wake of Watergate and Vietnam with a commitment to right the ship of state.
President Carter brought back to government honesty, integrity, and faith in government. He ran as a candidate on a government as good as its people, and he truly did deliver that.
I think President Carter in many ways was ahead of his time in terms of his emphasis, for example, on human rights, in terms of his thinking about alternative energy, in terms of his role in the Middle East peace agreements that he put together. And we all know that his ex-presidency, which has been such a long one, has been graced by remarkable contributions to humanity by former President Carter. I think right now, he is seen very favorably. I'm really happy to see that because he's a very special man.
One of President Carter's biggest challenges was energy in the face of the second Arab oil embargo.
Well, he was president during a very challenging time. As you recall, there was the oil embargo, which drove oil prices up dramatically. That became a catalyst for the highest inflation that we had really since the war, and probably even before that. And so he had to take some very tough fiscal measures. He did appoint Paul Volcker, who, by very much tightening monetary policy, caused a recession, which certainly was not an easy thing for President Carter to run through.
He was the first person to talk about energy and how we had to start looking at renewable energy plans and how our country could invest and incentivize in that area. And I don't know if you remember, but he had a solar panel on the White House, which when he left, President Reagan took down. But he had fuel mileage standards and, really realized, I think, way before anybody else that we had to start thinking about what climate and what it was doing to our planet.
But as influential as Jimmy Carter was as president, he will be remembered every bit as much for what he did after he left office.
The thing, though, that I think is absolutely most notable about President Carter is we can all debate the relative merits of any individual president's term. But I think it's inarguable that President Carter is the single most impressive, most successful, and most to be admired ex-president in the history of our nation. This is a man who took the responsibilities of being a visible public figure incredibly seriously and was a role model to all of us.
And you can read more about President Carter's legacy on the Bloomberg website and terminal. Bloomberg subscribers can find more at Daibigo. Well, South Korea's impeached president, Yoon Suk-yeol, has reportedly refused for a third time to appear for questioning in the investigation into his martial law declaration. Bloomberg's Soo-hyang Kim joins us now from Seoul, and so he will continue to see these sort of chaotic developments when it comes to South Korean politics. What's the latest?
Yeah, the political turmoil in South Korea has deepened over the last few days as acting President Han Duck-soo was impeached Friday afternoon by the National Assembly, just 2 weeks after President Yoon Suk-yeol was impeached over the short-lived martial law decrees. And this marks the first time an acting president has been impeached in South Korea, putting the country at risk at a time when geopolitical tensions are rising globally. So Finance Minister and Vice Prime Minister Choi Sang-mok is now acting president, actually, so who has to handle a wide-ranging issues from the FX crisis, budget plans, security policies related to North Korea, as well as the tragic air crash that happened yesterday. And meanwhile, the President Yoon Suk-yeol has been refusing against the investigation team's summon for 3 times, and these repetitive refusals may raise the chance that the investigation team will file an arrest warrant for Yoon. It is not clear yet whether the Corruption Investigation Office will summon Yoon for the first time this week or file the warrant.
What do we expect going into 2025 in terms of the timing for any, future election, and what sort of other developments might we see?
The impeachment process of President Yoon Suk-yeol and the investigation over him have been underway, but there haven't been a real breakthrough. The Constitutional Court, which has to make a decision until June, still has 6 judges, and it is waiting to appoint 3 other judges. And this needs an approval from the acting President Choi. So we are waiting to see how this political unsettled situation will be unfolding for the next few months.
Bloomberg Soo-hyang Kim there with the latest from Seoul. Let's bring in for some analysis Ellen Kim, who's a Senior Fellow and Career Chair at the Centre for Strategic and International Studies. And Ellen, as we continue just to see the ongoing chaos going into the end of the year and into 2025, what are your expectations in terms of how this plays out and I guess how protracted the uncertainty could be?
Well, this is really a concerning situation. The political turmoil that began with the President Yoon's martial law declaration is now escalating further with another impeachment of South Korean official, which is even creating even more uncertainty about how this political crisis will end. Although Deputy Prime Minister Choi Sang-mok is now promptly assumed power, he will likely to face us, same pressure from the opposition party to appoint the 3 constitutional justices, including and other measures that opposition parties have been demanding. And if Choi also refused to comply with those demands, he might be also facing the similar fate as Han. So there's a really alarming prospect that whoever comes to serve as an acting president next could also face a risk of impeachment. And that will have a very detrimental impact on South Korea.
Yeah, there has been a comment being made that, impeaching the acting president is no different to impeaching the entire cabinet, right? And does that kind of speak to the risks that we're seeing here? If we see this as being, at least in part, the result of some intense political maneuvering?
I mean, there's a lot of things going on here, but then, already there's the ruling party says that the acting president should be treated as a president, so that if National Assembly trying to impeach the acting president, they should have a quorum of 2/3 of the National Assembly, not the simple majority of the 300-member Assembly. So the plan is for the ruling party is that they're gonna file the case that this impeachment acting president is invalid. So there's a lot of uncertainty about how this is going to end.
And there's been concerns by foreign investors, certainly, about the lack of, a so-called control tower, right? Particularly if we're just going to see this play out like dominoes for other members of the cabinet or whoever, takes over next. Is that something that's a realistic risk to you?
I mean, we never expected that the acting President Han will be impeached, but this already happened, so we cannot really rule out a possibility. But I think that opposition party also have a pressure coming from doing it again, another impeachment, which will really have a negative consequences for South Korea, not just for economy, but also diplomacy and also the credibility of the country around the world. So I don't think that that the opposition party will 100% will push forward for whatever they have been doing, but still there's a pressure that the opposition party wants to fill out the free vacancy on the Constitutional Court. The problem is that whoever comes next will also have to debate whether they're gonna succumb to the pressure or whether they're gonna just have the similar fate as Han, and then who knows what's gonna happen. But I hope that does not really happen to South Korea at this point, and try to bring two parties come to the resolution of the situation.
Do we know, or do you have expectations on what will happen when it comes to the contentious appointment of those 3 vacancies on the court?
I mean, last week, the National Assembly had a confirmation hearing of those 3 appointees already, and it's just left to the acting president whether he's going to appoint those constitutional justice. And I think that this is already the opposition party made it clear that they're going to push this forward. At this point, the tragic incident with the airplane crash last night will temporarily bring a temporary pause to all those political activities and fighting right now. But I think that the situation doesn't change. It's just a matter of time that we're going to see whether opposition party will demand the acting president to appoint the free justice.
You talked about, the balance of maintaining credibility for the opposition being a big factor here as well. How do you gauge public support at this point? Is patience wearing thin?
I think that there is people who are feeling that another impeachment of acting president is raising an enormous risk for the country. And I think that opposition party also feeling that pressure. That's why I think that the opposition party made it clear that they're going to wait patiently and then wait for the acting president to, take the tragic situation under control first. And then they made it clear they're going to work with acting President Che to resolve the current situation with the constitutional justice.
Ellen, really great to have you with us. Ellen Kim, Senior Fellow and Career Chair at the Centre for Strategic and International Studies. And as Ellen mentioned, we continue to monitor the latest when it comes to the Jeju air crash in South Korea, looking at live pictures there of the crash site in Won, South Korea. And this, as of course we continue to see what investigators are focusing on in terms of the cause of this devastating crash. We're hearing that bird strike element as well as an unusual malfunction of the landing gear may be at play here. We also at the same time just this morning had a separate Jeju air flight, 7C-101, which was the same type of Boeing B737-800. That's the same model that was involved in the disaster on Sunday, was found to have a problem with its landing gear immediately after takeoff. But that plane, with 161 passengers on board, has already been safely returned to the airport. So these developments coming through very quickly, but we continue to monitor really any updates that will shed a bit more detail on the causes of that South Korean air crash that killed 179 people on Sunday. It is one of the deadliest passenger airline disasters in South Korea and among the worst globally this decade. The only two survivors were two flight attendants. Much more to come. This is Bloomberg. So on the stories we're following when it comes to China, and the US says it's planning to take further action to curb cyber attacks from China. That's after the White House identified a ninth telecommunications company impacted by a wide-ranging Chinese espionage effort. The Biden administration is also blaming companies that were slow to identify the attack, citing a lack of basic cybersecurity measures. The Chinese military says it held patrols on Sunday over waters and airspace of the South China Sea. The activity was close to Huangyan Island, also known as Scarborough Shoal, which is claimed by both China and the Philippines. A military statement says patrols have been strengthened in December. China's central government is urging local authorities to offer handouts to people struggling with the cost of living. Our China correspondent Min Lo joins us now from Hong Kong with the latest. And Min, how much does this sort of form part of the fiscal push and priority for the central government, particularly as we're just really 2-3 weeks away from the Lunar New Year?
Yeah, it's definitely part of that series of measures that the government has been taking in order to boost domestic consumption. And this time, the central government is urging localities with the means to do so to provide cash handouts before both the New Year and the Chinese New Year holidays that is taking place in late January. And the central government also asking localities to set up a system to provide subsidies, temporarily subsidized prices, and link social assistance with price levels. Now, the last time the government had given out cash handouts to the extreme poor was ahead of the October 1st National Day holiday. That was quite unusual. But this time, though, the impact of this handout is really not clear because it's couched as an encouragement and urging from the central government to local governments. It's not clear how big the scale of this handout would be, how many people will receive it, how much the subsidy is going to be. And again, analysts have been saying that these subsidies are not going to be enough if in the long term People are still not confident about the prospect of their income and the job market, and that means you still need the broader business confidence to pick up. You need the property sector to pick up, but we have seen how the consumer staple stocks have been underperforming throughout the, at least in the last few months, and this focus on boosting domestic consumption, that is likely to mean that we want to keep a close eye on these consumer stocks going into next year.
We're already seeing that continuous malaise when it comes to the Chinese yuan right now. This prospect of a record dividend payout could further add to that pressure.
That's right. This is sort of an unintended side effect of China's attempt to revive the stock market. There had been the capital market reform that was announced earlier this year, encouraging these state-owned enterprises to increase their dividend payouts. And we did see this bumper crop of payouts in the last quarter of this year, topping $16 billion. That's 47% higher than the previous year. And we're expecting next quarter's payout as well to be close to $13 billion, another record as well for the same period over the previous years. And so this, again, the reason why it's going to put pressure on the yuan is because many of these companies, they earn most of their revenue in yuan, but then they're paying out these dividends in Hong Kong dollars, so they need to convert that cash there. And this comes as the yuan is already facing a lot of pressure from the dollar strength. We have seen the PBOC pushing back against that. But NSA, this doesn't mean that we are going to stop seeing these increased payout. The PBOC likely to rely on other measures such as guiding the inflow of the dollar in order to support the yuan.
Bloomberg's China correspondent Min Lo. Well, as much pressure as we see on the yuan, probably not quite as bad as if you're looking at the Kiwi dollar. Take a look at the Kiwi, the year to date. This is sort of the recipient of the wooden spoon, if you will, the worst performing G10 currency this year. It is down almost 11% against the US dollar, trading at about that 56 cents level to the US currency. It has really been underperforming massively when it comes to the Bloomberg dollar index. And certainly underperforming even the likes of the Japanese yen, which is down by over 10.5% against the greenback for the year to date. Dollar dominance continues to kind of carry through for the last few days of 2025 and going at 2024, I should say, and going into 2025. But certainly some of the questions over the fiscal constraints and the debt issues for the US economy and how constrained the Fed might be going into the uncertainties of the Trump administration cast a little bit of doubt over that. But the Bloomberg dollar index up by almost just about 7.4% so far this year, up against all spot G10 currencies, and the greenback broadly seeing its best year in just about a decade. But very interestingly, even as we see some of the weakness for Asian currencies, particularly as you take a look at the Kiwi, the yuan actually is positive against the US dollar on a total return basis. More ahead on the Asia trade, this is Bloomberg. The latest stories from the corporate front. Newman's Health Food is offering 250 million shares in a Hong Kong IPO that could raise as much as $35.2 million US. A stock exchange filing shows a price range of 80 Hong Kong cents up to $1.09. Trading is expected to begin on January 10th. The Japanese supplier of chip package substrates used in semiconductors made by NVIDIA says it may need to increase production capacity to keep up with demand. Biden CEO Koji Kawashima told us exclusively that sales of the AIU substrates are robust as the company builds a new factory in central Japan. He also gave us the outlook for another key US customer.
We have a very long relationship with Intel, and we have been doing business with them for about 30 years now. So there is no doubt that Intel is one of our important customers. We will continue to support Intel's recovery.
We are counting down to the start of trading in Tokyo in just a few minutes' time. It has been a historic and dramatic year for Japanese markets. The chaos of the BOJ's hawkish turn to the big M&A developments, a new Prime Minister. Our Japan stocks reporter Momoka Yokoyama joins us now from Tokyo. And Momo, what's the expectation for Japanese stocks markets as we see this last trading day of 2024?
Yep. So stock is set to fall today after U.S. Big tech names falling last Friday. However, still Japanese stocks are showing resilience going towards the year end, kind of following the seasonality to rise in the final days of trading. Last week, of course, it was a lot much helped by the deals between Nissan and Honda, as well as a new M&A deal that came out of Nidec. So Nikkei is now back at 40,000 yen, about 20% up from the beginning of the year. So it's looking that it will fall today on the final days of trading. Yeah.
We've got the likes of Goldman saying when it comes to the yen, this is kind of a sweet spot for global investors. Is there much risk in further weakening?
So I recently spoke to the strategist from Goldman. He sees actually the risk of yen falling beyond 160 is quite unlikely. That's because of the possible intervention or any forms of intervention, but either verbally or actual intervention is very unlikely. Last week we also saw some of the government spokespersons saying, giving some warnings against the speculative yen move. So the weakening is looking quite unlikely.
Japan stocks reporter Momoko Yokoyama there as we head into the final trading session of what has been an eventful year for Japanese stocks and investors. And these are some of the names we'll be watching when trade begins in Japan and in Korea shortly. And of course, we are watching Jeju Air at the open in Seoul and some of the other aircraft names as well. Following that deadly crash on Sunday, its peers in Korea will be in focus, as well as some of the broader airline and aviation names across the region on watch today. This as we continue to look for answers. Investigators said to be focusing on a bird strike as well as an unusual landing gear failure as the possible causes of one of the deadliest passenger airline disasters in South Korea and globally this decade. Only 2 survivors, 2 flight attendants being pulled from the wreckage. We'll be looking at that data from the flight recorders, the footage of the crash and some of the other evidence to try and bring to the cause of that accident. We also heard separately that another Jeju airplane of the same model had to be returned safely to the airport after a problem with the landing gear. This is Bloomberg. This is the Asia Trade. We're counting down to Asia's major market opens, and we are looking like a pretty tepid end to the year. Of course, one of the quietest sort of couple of days to end 2024 as we see trading volumes, both if you're talking about equities or stocks or other assets, looking pretty slim. So any kind of big moves that we might see might be really as a result of illiquidity as opposed to any sort of conviction trade. And certainly any conviction might be to the downside too, given the pretty poor handover we had from the Wall Street session on Friday, the big losses led by big tech in particular, and that's likely to play through. Some of the political crises that continue to envelop the likes of South Korea will be at play here as well as watching, of course, the aviation and airline sectors with that devastating Jeju Airlines crash over the weekend. We are looking at that weaker open, though. The Nikkei 225 looking like, at least as we set up for 2025, we could see sort of further gains, with the likes of Goldman saying where we see the yen at the moment, unlikely, I should say, to weaken beyond that 160 level is really a sweet spot when it comes to global investors. We're seeing the Nikkei trading pretty flat at the moment in the opening sort of seconds of this session. The Topix is up by just about 0.1%. And as I mentioned, that dollar yen trade at 157.90 at the moment. But really, that story of dollar dominance really continuing to play out against all Asian currencies. And we'll be taking a look at some of the biggest losers, in particular the likes of the Kiwi dollar, as well as that continued pressure on the yuan. Take a look at the Korean markets at the moment. Of course, there's a lot going on when it comes to Korea, not to mention Korean politics, of course, as we see that further impeachment and the sort of uncertainty as we look ahead to what that constitutional court shape-up looks like and how we'll see that sort of road to a snap election going into 2025. The political manoeuvrings certainly do continue. The Kospi down by about 0.4% at the start of the session, and we continue to see that further weakness and pressure on the won. And of course, watching some of the aircraft and aviation names as the Korean session gets underway, because investigators are focusing on a bird strike and an unusual landing gear failure as a possible causes of the Boeing 737 crash in South Korea that killed 179 people. Our Bloomberg Global Business reporter Hee-jin Kim joins us now for more. And Hee-jin, just in the last hour, we actually saw that reporting from Yonhap that a separate Jeju Airlines plane had to be returned safely to the airport after a problem with its landing gear. We understand that this is the same type of aircraft that was involved in the devastating crash over the weekend.
Yes, that's true. Well, that's what the Yonhap News reports say, that it's still tricky that although we know that there seems to be a problem at the landing gear at the plane during the crash. During the crash yesterday, but the investigators are still working on the case. But earlier this morning, as you said, that there was a problem at a landing gear at a plane of Jeju Air at the Gimpo International Airport, and then this plane is the same model, which is a Boeing 737-800, and it was the same model that was involved in the disaster yesterday. And then, but when I asked the Jeju Air, they are still checking the case this morning, and then they're gonna get back to us about what's gonna happen. But it's still too early to make a conclusion that yesterday's disasters happened just because of the malfunction at the landing gear, because it is basically, the pilot has other contingency options, like you can have like stress your the flags. You can use other mini flags on the plane, and so there are other contingency plans. But the only thing we know at the moment is that apparently, given the video that was distributed to the public, that the plane didn't have any landing gear working at the moment. So yeah, just let's see what's gonna happen.
We are just getting lines at the moment crossing the Bloomberg with an announcement from South Korea's acting president, Choi Sang-mok. Of course, he's not been in the job for very long after his predecessor was also impeached. He's calling for an investigation into the cause of the crash and has asked the Transport Ministry to do safety checks on aviation. He is saying that South Korea will use all resources for the families and those injured in the Jeju crash. We are seeing actually at the moment Jeju Air shares dropping 13% as that first reaction on the market. So what can we expect going forward in terms of perhaps, some of the actions from the government, and what we're looking forward to in terms of the further developments of the data and evidence that becomes available from the aftermath of this incident?
Yeah, so the investigators yesterday collected the two key critical evidences, which is flight recorders, and another is voice recorders, which records basically the conversation between the cockpit and the control tower. So they're going to analyze these two critical evidences first, but it's going to take about a month because one of the recorders were partly damaged. So I expect it's going to take some time for us to see the final conclusion about the cause of this accident. And then meanwhile, we see this incident definitely have some impact on the Korean economy, because now people are saying that we need to be more cautious in terms of using the low-cost carrier. And then as you mentioned, Korea is already suffering the political crisis because of the impeachment of the President Yoon Suk-yeol, as well as the Prime Minister in just 2 weeks. So that hurt the consumer sentiment already. And then this disaster with this Jeju Air, apparently most of the passengers seems to be the group tour package consumers who are trying to enjoy their Christmas holidays and New Year holidays with their family and friends, and it's gonna definitely hurt the domestic consumption in South Korea.
It's very interesting that you talk about that, because of course we have the week-long period of mourning as well that's been declared. And actually, if we recall, just 10 years go with that sinking of the Seawall ferry. We saw that actually casting a big economic shadow over the South Korean economy then as well. We'll continue to watch for further developments. Of course, our Bloomberg Global Business reporter Hee-jin Kim is there with the latest. As that I mentioned just a few minutes ago, we do see that big reaction when it comes to Jeju Airlines. Jeju Air, they're down by close to 14% at the moment. Its parent, AK Holdings, also looking to see that reaction after we saw the devastating crash over the weekend with 179 killed on board, and it was one of the countries and in fact one of the world's worst ever aviation disasters. We're also watching some of the insurer shares for other companies, including Samsung Fire and Machine Insurance will be on watch as well, as they were the insurers of the Jeju airplane that crashed. And we are expecting this hour that President Biden will be making some remarks on the former President Jimmy Carter any moment now, in fact. And the former US President Carter has died at his home in Georgia, age 100. The one-time peanut farmer leaves a legacy of promoting human rights and peace after a single term in office that faced challenges including soaring inflation and a hostage crisis in Iran. Let's bring Bloomberg's David Weston in New York. And David, in last hour we talked about some of the biggest foreign policy achievements, and we didn't have time to touch on China. And we know that, Jimmy Carter met with, I believe, every single former and current leader in China. He was really considered a friend of Beijing.
Yeah, well, he was, because when he came to office, relations had not been normalized between the People's Republic of China and the United States. Richard Nixon and Henry Kissinger had reached out, and there was some sort of informal arrangement, but there wasn't formal recognition of one another with embassies and ambassadors. And Jimmy Carter and the Carter administration really moved forward on that. It seems inevitable now as we look back on it. At the time, it was not inevitable. It was a decision that they made to push forward, despite some real resistance in Washington, because in part what they had to do, they had to renege, had to really cancel a mutual defense treaty with Taiwan, which is very controversial. Of course, this ultimately ended up leading to the People's Republic of China taking the seat in the United Nations. So Jimmy Carter really pushed hard on that. In fact, Deng Xiaoping actually made a state visit to Washington during Carter's administration.
It's quite interesting to read about the warnings from Jimmy Carter about the possibility of a Cold War with China, given, the current sort of expectations of that relationship, right? But we've talked about some of his big foreign policy achievements. Perhaps lesser known are some of the economic achievements and his really significant impact on Wall Street.
Yeah, as you said, Heidi, most people think about it in terms of stagflation, where there was very weak growth and really runaway inflation, and he got blamed for that, in addition to the oil crisis that the United States suffered in the late 70s. But he did have a real effect and really was ahead of his time on some things, like deregulation. He put Alfred Kahn in, that deregulated the airlines. He also put Paul Volcker in, to the Federal Reserve. He wasn't there long enough to reap the benefits of that because, of course, we went into a recession or two in order to get inflation under control. But really, Jimmy Carter is the one who brought that all to pass. Also, he was an early proponent of concern for climate. Maybe you remember this, maybe you don't. You're too young to actually have been there. But he put solar panels on the White House because he was concerned about fossil fuels. He thought we needed to move to solar power. So he was way ahead of his time in some regards.
How would you rate his success? Because there's a lot of commentary that perhaps, he was sort of overwhelmed by the course of historical events, right? And yet when you take a look at social media, even just scrolling through my feed, he was so beloved.
And now when he left office, I mean, as sometimes happens with U.S. presidency, there is a revision afterwards. When he left office, he was thought of as not being particularly successful or even having that much of an effect on history. As time has gone on, that's been revised, and a lot of historians now think that he had much more of an effect than he was given credit for, particularly, again, given the fact that he only had one term in office. He only had 4 years. He crammed a lot into it. So I think history now is looking more kindly on Jimmy Carter. Also, Heidi, he really inherited a tough hand because it was coming off of Watergate and all the problems that we had with Richard Nixon and then Gerald Ford's pardon of Richard Nixon. And also Vietnam was just very recently in the past a terrible failure for the United States over in Vietnam. And so he inherited all of that, as well as really an economy that was in trouble, in part because I think a lot of what Richard Nixon has set up.
Bloomberg's David Weston there joining us in New York, and we are waiting to hear from President Biden on this hour. More ahead on the Asia trade. This is Bloomberg. Take a look at what we're tracking when it comes to Asian bonds as we head into the last couple of days of the year. And this is really, we're tracking sort of the uncertainty as we see going into that final week and heading into 2025 with a lot of question marks over how far the Fed is really able to move, given the uncertainty over the fiscal side of the equation for the US economy. Bond investors really kind of entering these final days with the risk potentially for some of these sovereign bonds of ending in the red. The Treasury market, for example, really close to vanquishing the small gains that it's eked out so far in 2024. Investors really growing more and more wary of President-elect Trump's agenda, the limited outlook for further easing for the Fed next year. Let's bring in for some insights, and it's Anip, who's a head of fixed income research Asia at UBP. What are your expectations? And thank you for joining us as we head into the start of the year in a couple of days. What are your expectations for 2025 in terms of how much we should be managing our hopes from the Fed?
Well, basically, we reckon that, market now actually also pricing in only 2 rate cuts next year in the first half. We also have that view from UBP. Basically, you think that, Fed may pause. And also a 10-year U.S. Treasury at the moment, you see it's 4.62%, right? We reckon it could, go up to around 4.75 to 5%. So strategy-wise, we reckon investors should manage the duration and be cautious, defensive, and fixed income, should be used as carry rather than capital gain. I think that's, the themes that we think, should look forward in 2025.
What could be a surprise to that scenario from the US economy? Would it be more on the fiscal side if that underdelivers?
Well, we were still waiting for, what sort of policy Trump is going to bring, to the market. People do worry about inflation, but we basically think that inflation could be in the range of 2.5 to 3% next year. Yes, inflation is going to be sticky, but it's not going to be surprise on the upside. But if you are talking about the risk, maybe there could be more supply on the Treasury side as well that put pressure on the long end of the U.S. Treasuries. I think those are the things that we need to pay really attention into.
In Asia, I see you're most constructive on Japan financials, but also in markets like India as well and Hong Kong.
Yeah, basically, I think, what we are looking at for 2025, we need to manage the duration. So that's why we better stick with short duration bond. On the other hand, credit spread has been pretty tight at the moment. So that's why we are, be cautious about that. But at the moment, we don't reckon that credit spread will widen substantially from here, mainly because supply risk should be manageable in Asia. At the same time, if you look at the all-in yield at the moment, some of the IG bonds are over 5%. If you stick to IG bond, basically it's something, good for your carry. So that's why we remain constructive in terms of the Asia credit. That's why we like some of the Japanese banks, because we like financial over corporate. Hong Kong corporate-wise, we reckon that there could be supply from their side, but we basically just focus on IG. We reckon that Hong Kong corporates are remain, with pretty solid balance sheet. Lastly, we also look at some of the Indian SOE name BBB credits we like because I think there's continued inflows into the Indian, credit market. So US dollar market basically for Indian names would also benefit. So again, we'll be defensive, short duration, IG over high yield, as well as financial over corporate. I think that's the strategy should be going forward.
Are Chinese government bonds compelling at all? We're looking at total returns around 9%, I believe, for this year. Do you think that rally can continue?
Well, I mean, at the moment in China onshore market, it still continue with the easing policy. So that means the bond yield itself would have further room to go lower in terms of yield. But at the same time, it has moved quite a bit in 2024. So I would say it could be marginally lower later on. But at the moment, because it's in easing cycle, definitely the yield would be still good for some of the onshore investor to look for some carry over there.
And so when you take a look at some of the emerging market, when you take a look at some of the emerging market options across Asia, do you see that risk there or opportunity, also depending on, I guess, how the Chinese economic rebound performs?
Yeah, I think, at the moment, what we are looking at on the macro picture would be the dollar is continue to be strong, at least in the first half of next year, because of various reasons, on the fiscal policies, on also, the macro front. We're still positive about the U.S. market, but overall, the impact on the Asian currencies would be, it could be having a bit of pressure over the emerging market. So, but overall, I would say, here in Asia, we still be constructive because the economy is still robust. We reckon that Asia economy would still lead the growth, at least, in 2025. And therefore, we think that inflows into the market will continue. And we like, the Asia bonds, US dollar, domestic, currencies as well. We think that, they still will be constructive going forward.
But also European bank AT1s?
Yeah, I mean, that's good that, you bring that up. In fact, as we mentioned, we like, the carry theme, for 2025 fixed income. So therefore, some of the European bank AT1 with short call day high coupon reset, at the moment is yielding around close to 7%. I think it's still, pretty good carry going forward in 2025. And we like European bank because,
really great to have
they are
with
quite
us.
solid. As well, yeah.
And it's Nip, who's ahead of fixed income research Asia at UBP. Really great to have you with us and some of those calls for what she's constructive on going into next year. More ahead on the Asia trade. This is Bloomberg. Take a look at the reaction we see across South Korean assets, particularly really focusing on the aviation and airline sectors. We are seeing Jeju Air actually sort of off the session lows, I will say, still down about 10%. This as we continue to really process and look for the possible causes of the investigation underway of the South Korean air crash that killed 179 people over the weekend. Really one of the deadliest passenger airline disasters in the country and globally. We are also watching for some of the downward reaction for some of the other aircraft and airline-related names, as well as the parent company for Jeju Air and the insurers for the airline as well. The Kospi more broadly, though, actually seeing a little bit of upside, despite, of course, a weak lead from the sell-off in tech stocks on Friday on Wall Street. We have also seen the won weakening, opening weaker as well. So the combination of these latest crises, as well as the ongoing political crisis as well. Jeju Air also suffering, according to reports, a separate landing gear malfunction on a different plane, the same model as the one involved in the weekend accident for flight 7C101. That flight with 161 passengers on board has been returned safely to the airport. At the same time, we see the continued turmoil when it comes to the South Korean political space, right? The impeached president reportedly refused for a third time to appear for questioning the investigation into his martial law declaration. We're also seeing, of course, the acting president, Choi, calling for an investigation into the Jeju Air disaster in Won just over the last hour or so. Let's get some more from Bloomberg's Soo-hyang, who joins us now from Seoul. So we see the acting president, who's only been in the job since Friday, really sort of try to take charge and install some confidence in this government and how it handles what it can do when it comes to this terrible disaster. It is just one of the latest big challenges for a government that is really in a state of disarray.
Right. This political turmoil and the leadership vacuum may continue for the next few months. So the new acting president, Choi Sang-mok, called for a strict investigation into the cause of Jeju Air plane crash that just happened yesterday. And President Yoon has been defying the investigation team's request for questioning for 3 times, and this may increase the chance that the investigation team will file an arrest warrant for Yoon, who has been vowing to fight the case in court. While investigators are trying to pin down, the opposition party is seeking to push forward the process of appointing 3 judges at the Constitutional Court, which will give a ruling over the parliament's impeachment vote. This will continue as Prime Minister Han Duck-soo, who was an acting president after Yoon's impeachment, was also impeached last Friday. So this happens all at the time when there are rising geopolitical risk and the uncertainties over the trade tensions and the tragic air crash that happened yesterday.
There's been a lot of speculation as to where we go from here, right, in terms of the next steps in the impeachment process. And there's, also, perhaps sort of an outside risk, but concerns that, well, where to from here? You could potentially impeach the entire cabinet.
Right. So there is a chance that the opposition party will try to push forward the appointment of constitutional court judges, and unless the new acting president and finance minister Choi Sang-mok appoints the 3 judges that are asked by the opposition party, that will also face another impeachment, unfortunately. But things are now very uncertain at the point, since we have this tragic tragedy that he has to handle for the next few days and weeks. And this also calm down the political turmoil and the fighting between the opposition and ruling parties that happened over the last few weeks at the moment. But it is really unshaky time at the moment, because the market and the Korean won has been weakening for the last few weeks, and that will not likely to be have an upbeat moment, because the consumer confidence in December dropped by the most since the pandemic. So there are a lot of troubles at the moment.
Soo-hyang Kim there joining us from Seoul. Well, we are hearing US President Biden now making some remarks about the former President Jimmy Carter. He has already said that Jimmy Carter will receive a state funeral in Washington. President Biden has praised the former President Carter as an extraordinary leader, statesman and humanitarian. And this as we continue to see the tributes come through for Jimmy Carter, who died at the age of 100 at his home in Plains, Georgia. Let's take a listen to what President Biden is saying.
We'd all do well to try to be a little more like Jimmy Carter. My mom, you've heard me say this before, used to say, bravery lives in every heart, and someday it'll be summoned.
We do have some breaking news crossing Bloomberg when it comes to economic data out of Japan. The Japan Bank PMI of the final reading for December actually coming in at 49.6. They're still shy of the level that suggests expansion, but certainly a recovery from the 49 of the previous month. That had been sort of the previous reading had been close to the lowest since March this year. And we've seen really successive months of contraction, about 5 or 6 months of contraction now. We're also seeing quite a bit of weakness when it comes to the output front there as well, but coming in at 49.6, so a little bit better than the 49.5 that was the prior reading. And this as we continue to watch for expectations of how the BOJ will navigate the start of the new year. They have signalled that that January rate hike is still on the table. What has been a pretty lively period of debate, with both pro-rate hike and pro-wait-and-see views being expressed by the BOJ. Well, to China, and the central government is urging local authorities to offer handouts to people struggling with the cost of living. Our China correspondent Min Lo has joined us now from Hong Kong with more. And Min, there are some economists that have long argued for these direct payments to households. Is this what we're seeing?
Yeah, I think we should take it as a positive sign that we could see more local governments giving out cash handouts to people ahead of both the New Year and the Chinese New Year. And we know the Lunar New Year is often a time where we see, it's a major travel season. People go back to their families. They're going to spend a lot of money buying gifts for family members, for example. But the thing that is unclear at this point is how big is the scale of these cash handouts, because it's an urging from the central government asking local governments with the means to do so to provide these cash handouts and to also set up a system to temporarily subsidize prices and link these social assistance to price levels. Now, the last time we saw China hand out cash handouts to the extreme poor was ahead of the October holidays. That was quite an unusual move. And again, these cash handouts, it really depends on how big a base of population that is going to receive it. And in the longer term, you really need consumer confidence to come back, and that requires people's confidence in their income, their job prospects to improve. And then that means you need to see the broader confidence among the businesses improve as well, and the property sector as well. So it's really a lot of factors that are in play here that would help to bolster consumer confidence, and it's not likely that a one-off cash handout is going to be helpful to bolster confidence in the longer run.
And of course, one of the other factors, and a major one, is going to be sort of tensions between China and its trading partners and potentially trade actions, right? And we're hearing that China has started these probes into beef imports. We've certainly seen, Australian importers, or exporters, I should say, being involved as well. What do we know?
Yeah, so the Chinese Ministry of Commerce has announced that they are investigating beef imports, and that's at the urging of a local industry association who say that the increase in imports over the last few years has harmed local producers. We have seen, if you look at the statistics back from 2019 until now, imports risen by more than 70%, and that's led to prices domestically falling to a multi-year low because you have multiple factors at play. You have an oversupply, plus you have sluggish consumer demand, given that beef is considered a premium meat. It's several times more expensive than pork, for example. So the countries that could be affected include Brazil, Argentina, Australia, the US. Brazil in particular, they sell about nearly half of their beef exports to China, which is now the largest global importer of beef. So it's going to hit the Brazilian economy pretty hard if China decides to impose hefty tariffs at the end of this investigation. And this comes even as Brazil has been embracing ties with China, although it did push back on these flood of cheap Chinese goods, imposing fresh tariffs, for example, on cable optic fibers, for example, as well as on iron and steel products.
Just less than 4 weeks since China removed some of those bans on Australian beef as well. So we'll continue to watch that very closely. Bloomberg's China correspondent Min Lo there with us. And we are seeing, of course, trade casting this long shadow potentially going into next year, particularly at a time we're also seeing data from China's Passenger Car Association showing that profit margins in the world's biggest auto market were squeezed even further this year. The average was 4.4% from January through to November. Let's get more on this with Xiaofeng, who's the co-head of China Industrial Research at CLSA. So before we get to, I guess, the sort of specific fundamentals of what we're seeing with this market, how big a risk do you think the trade tensions aspect, the punitive actions that we could see be on Chinese automakers next year?
So good morning, Haidi. So generally, I think the trade tension on the auto side probably will be getting worse before getting better. China is on the way to export at around 5 million cars this year. But on the other side, the global auto market is not really a growing market. We are talking about 75 to 80 million unit sales every year in the global markets. So 5 million more sales from China means somebody else is losing that market. So as for now, we're looking for around 7 to 8 million car sales out of China in the next few years. From that perspective, we believe the trade tension probably will be getting worse. In the meanwhile, we see the Chinese automakers are trying to put more production in local markets in order to at least ease the tension. So I believe it's going to be a mixed outlook for the trade, at least for Chinese automakers in the next few years.
And it comes on the back of a huge amount of investment and overcapacity and lower and lower prices, right? So how difficult is the switch to demand pull if they want to completely change the growth model now?
So I guess we have to look at the capacity utilization, also called oversupply situation, from a structural perspective. Overall, for now, the capacity utilization is roughly 50 to 60% for the whole auto industry in China. But if you look at the EV versus ICE car, I think this is showing a totally different picture here. The EV makers are generally running at around 80% of capacity utilization, which is considered as an okay level. While on the other hand, we are seeing a lot of idle capacities for ICE car makers. So that's why starting from 2025, we believe we're going to see a materialization of the industry consolidation, meaning either in the format of brand exit or capacity shutdowns or industry MAAs. So the EV is likely to achieve 55% of penetration next year. So overall, we believe the passenger vehicle market will remain under pressure. The margins will remain under pressure. Price cuts, competitions will still be repeating next year. But EV makers who have proved themselves to have the ability to generate earnings from overseas or from premium brands are likely to stay in the game and outperform.
You know, for car makers and EV makers in particular, so much investment has gone into this from China, right, as a pillar for domestic growth. Do you see the ability to manufacture overseas as something that could, you know, progress over the next few years as a way of perhaps addressing the overcapacity and the political challenges?
I think there's two ways to look at the issue here. First of all, I think for now, at the first stage, a majority of the factories the Chinese automakers are trying to build are the assembling factories, which is relatively easy to build and to start ramping up capacities. But in the meanwhile, assembling accounts for over 90% of the labor or employment in the whole auto production process. So that's why building the assembling factories in the overseas market should be good enough, at least for the first few years. In the meanwhile, for longer term, I believe it will be a trend that the automakers will need to move the whole supply chain, including batteries, EV motor control, smart features, intelligence driving, all those type of components to overseas. So one of the biggest advantages of Chinese automakers is really their supply chain and cost control. So the second thing to look at for this transfer of factories or production capacities is the cost level definitely will be much higher in overseas markets compared to domestic China market. But I think it's more important to look at the relative cost level, meaning Volkswagen, Toyota, those joint venture or foreign brands, they will be performing at much higher costs in foreign markets as well. As long as the cost advantages for Chinese automakers should still be the same, they should be fine in terms of grabbing more market shares.
What do you expect in terms of perhaps supportive government policy next year, either directly for the sector or indirectly through, we're hearing more about, you know, household support, more encouragement for household spending and payments to households and the like. Do you think that will have a meaningful impact on, you know, decisions being made about major purchases like new cars?
Yes, I think definitely the biggest X factor next year is really the stimulus policy for the trade-in cars. The policy is working very well this year, starting from the third quarter that we see a reflection of auto car sales demand. So next year, we estimate the policy will likely to be extended for another year or at least a year or 2 years. The second thing is we are seeing a shift of the policy focus for Chinese government. Over the past few years, we are seeing China has been pouring a tremendous amount of resources to the investment or to the production sides. So China wants to be the production hub for the global market, which has been working very well until the COVID hit. So now I guess both the policymakers as well as the industry participants realize that the more productive they are, the more resources are pouring to the production side, the more deflationary pressure they actually generate into the economy. So we are seeing a shift of policy focus from the production side to the consumption side. So the trade-in subsidies for cars, the subsidies for home appliances, for the equipment makers. So things are moving towards the consumption side, which we believe will have a much better impact next year. And also based on CRAC estimates, we believe the multiplier effect for car subsidies is around 2 to 3 times, meaning every 1 RMB stimulus they're spending on car spending is going to generate about 2 to 3 RMB of real economic growth. So the policy is working very, very well, and we believe that policy is going to be extended.
Xiaofeng, co-head of China Industrial Research at CLSA, really great to have you with us. Well, Jimmy Carter, the 39th US president, has died at the age of 100 at his home in Plains, Georgia. Carter's presidency was marked by significant achievements, including brokering a peace accord between Israel and Egypt. Bloomberg's David Weston takes a look back at his life and legacy.
President Carter came to office in the wake of Watergate and Vietnam with a commitment to right the ship of state.
President Carter brought back to government honesty, integrity, and faith in government. He ran as a candidate on a government as good as its people, and he truly did deliver that.
I think President Carter in many ways was ahead of his time in terms of his emphasis, for example, on human rights, in terms of his thinking about alternative energy, in terms of his role in the Middle East peace agreements that he put together. And we all know that his ex-presidency, which has been such a long one, has been graced by remarkable contributions to humanity by former President Carter. I think right now, he is seen very favorably. I'm really happy to see that because he's a very special man.
One of President Carter's biggest challenges was energy in the face of the second Arab oil embargo.
Well, he was president during a very challenging time. As you recall, there was the oil embargo, which drove oil prices up dramatically. That became a catalyst for the highest inflation that we had really since the war, and probably even before that. And so he had to take some very tough fiscal measures. He did appoint Paul Volcker, who, by very much tightening monetary policy, caused a recession, which certainly was not an easy thing for President Carter to run through.
He was the first person to talk about energy and how we had to start looking at renewable energy plans and how our country could invest and incentivize in that area. And I don't know if you remember, but he had a solar panel on the White House, which when he left, President Reagan took down. But he also had fuel mileage standards and, really realized, I think, way before anybody else that we had to start thinking about what climate and what it was doing to our planet.
But as influential as Jimmy Carter was as president, he will be remembered every bit as much for what he did after he left office.
The thing, though, that I think is absolutely most notable about President Carter is we can all debate the relative merits of any individual president's term, but I think it's inarguable that President Carter is the single most impressive, most successful, and most to be admired ex-president in the history of our nation. This is a man who took the responsibilities of being a visible public figure incredibly seriously and was a role model to all of us.
Well, China's ambitious campaign to revive its flagging stock market has made the yuan an unintended casualty, with record dividend payouts leading to outflows. Catherine now leads the Bloomberg Asia Stocks team and joins us now. So, Catherine, this is just yet another way in which we're seeing more pressure on the Chinese currency.
Good morning. Absolutely. I mean, this is such a difficult thing here for government officials. I think that they need to really figure out, how can they maintain market stability without sort of hurting their longer term policy goals. And so here it's about how do you support the stock market, but also how do you support the yuan at the same time? And right now it seems like quite a conundrum because of these sort of the double-edged sword here.
what's sort of the broader outlook now that we seem to have a real sense of conviction from policymakers as to how they want to turn the economy around? Is that necessarily going to lend more conviction when it comes to investors on China?
This is the $1 billion question. Everyone wants to know how the outlook looks like. And I think that, we can tell from what policymakers have been saying all year, especially in the second half of the year, that they really want to, stimulate the economy, stimulate markets. And we're seeing some of the successes, right? Like the CSI 300 this year is up, and it looks like it's going to be the, close for this best year since the pandemic. The HSCI, the sort of China stocks that are traded in Hong Kong, it looks like it's going to be the best year since 2017. I mean, there are some of the successes here. People are believing, investors are believing that there are policy efforts to boost the market. This one, I think, is another one of them. Here in this example, we're talking about sort of China's campaign to ensure that companies are boosting shareholder returns, are thinking about corporate governance, and this is why a lot of companies are issuing these interim dividends and giving something back to the investors. But 2025 is going to be kind of a mixed bag, right? Investors are quick to forget, and they're going to need to see a lot more signs of the stability, whether it's increased handout on consumption on the consumption side, or new policies or trading policies, something that they can really bite their teeth into to ensure that the rally that we've seen. That's a lot of it has petered out because people keep forgetting is really sustainable.
And AI localization looks to be another, again, a big year for that theme next year, right? What do we know about the top performer or the top performing stock of 2024, and does that continue to run into the next year?
Yes, my camera is going a little bit nuts. Let me just turn it off real quick. So we have this amazing company. It's Cambricon, sorry. And I say amazing because the rally here has just been, double of what we've seen for the second stock, second best performer on the CSI 300. I mean, this is a company. Hi. Hello?
Catherine, we do still have you. Can you hear us?
Yes, I can hear you. Yeah, my camera was going crazy, so I. Can you hear me? My camera is going a little bit nuts right now. I think
Catherine, I don't know what's going on. We've got some gremlins in the tech. I think Catherine was talking about the top stock of 2024. This is Capricorn Technologies, 383% climb this year, really driven by that enthusiasm over that tech localization theme for Chinese investors. Kat Nahu leads our Bloomberg Asia stocks team. We do have more ahead on the Asia trade. This is Bloomberg. Well, Bloomberg Intelligence says that Asian life insurers' new business value could climb by double digits in 2025. Let's get some more on the outlook. The lead insurance analyst, Stephen Lam, joins us now. So, Stephen, if you take a look at the key profit drivers for Asian insurers next year, what does that look like?
Hi, good morning, Heidi. So, the quick answer would be two things. That would be investment returns and also the new business value growth. Now, if we take a step back into 2024, I think we need to observe something that's very important, which is especially for the life insurance companies, would be the bond yields, right? Now, if you think about it, there are two very opposite directions that happened towards the end of this year. That will be Japan and mainland China. So I think it's worth to notice that in Japan, the local bond yields have risen very steadily and gradually. But then in China, it has been going down quite rapidly, to a point where the 30-year bond yield actually in China is now lower than the Japanese counterparts. And that's basically the first time we've seen that in the history. So the backdrop for Japanese life insurers will continue to be very good, at least from the bond returns perspective. And then for the Chinese counterparts, it's going to be a tough one on the fixed income side. But then I think the silver lining for the Chinese companies is that the local stock markets. I think the previous speaker already commented about some of the Chinese local stock market dynamics. Now, if that continues in 2025, that will be a very, very big boost for the Chinese insurance companies' earnings momentum.
In terms of specific companies, what's the standouts to you in terms of where we could see that upside surprise?
Yeah, so I think following what I said just now, the Chinese companies, in terms of the market expectation for profit, is actually still very low for 2025. I think the market has learned that we don't price in too much, especially for the stock market performance, until we can actually see that possibly in the rearview mirror based on the experience that we have in 2024. Now, there's also another thing that is going on, which is for the life insurance companies, is new business value growth. Now, 2024 has been an awesome year for the Chinese companies. This has been a very strong demand in terms of savings. And also for AIA and Prudential as well, coming from the mainland customers. So in 2025, we still see that momentum going very strong because of the savings demand, low interest rate in China. People are looking for very, very safe, but then a little bit higher return from the insurance companies. So those two factors will probably drive the earnings and also share price performance for the Chinese companies in AIA Prudential.
Our lead insurance analyst, Stephen Lam, there with us. Take a look at how futures are shaping up at the moment as we close out the final couple of trading sessions. In fact, the final trading session for Japan of the year. We are seeing Greater China futures all looking fairly tepid. Our markets coverage continues.